Namaste to all. I welcome you all on this another panel discussion on the accounting standards. And today, what we are discussing is the disclosure on the related party. And for that disclosure on the related parties, we've got two eminent speakers, I would say, both of them authors. We have got CA Kamal Garg, which most of the students, at least in the northern area, but many of the members in throughout the India, they know him because he has been traveling extensively. He's a BCom honors, FCA, DISA, MCom, insolvency professional. But of course, he is very well known for the corporate laws and the IFRS and the Ind AS. He has authored more than 12 books and has been a regular speaker, not only among students but amongst members also throughout the country. I welcome you, Kamal Garg, and thanks for sparing your time.
Thank you, sir. Thank you very much.
Another panelist which we have today is CA Dr. Alok Garg. Alok ji also, if I talk about, he's got multiple qualifications, CA, CS, and he's got the India certification courses, BSR, BCom honors, author of around 4 books on accounting standards and Schedule 3. He has been, of course, a contributor on the, both of them have been contributor on the certification course for the Ind AS of the institute, and regular writer and regular speaker. Alok ji has been also a great speaker throughout the country, I would say. So it is really a welcome, Alok ji, and thanks for sparing your time despite you are not well today, but still you have taken out time to share your views with all members.
Thank you, sir.
And we have got a young and dynamic moderator today, CA Asha K. Sharma. She also is a regular, I would say, contributor to the fraternity. Apart from being CA, who's having more than 10 years of experience, she have been conducting regular programs, had cleared so many of the certificate courses. But then again, she's also the deputy convener of one of the study circles in the northern region. And the questions which have been prepared, taken from many of the members, and she has put her own efforts. So she would be moderating. I welcome Asha ji, and thanks for sparing your time for this.
Thank you, sir.
Friends, when I talk about related party, if you see various disclosures which are there even in the Schedule 3, financial statements. So for every item, whether it is receivables, loans, or reporting, other standards, everywhere they want, okay, what are the transactions with the related party? So the importance of related party is so huge that whether it is standards, accounting standards, whether it is Companies Act, whether it is Income Tax Act, everywhere the emphasis is there on the related party. So transactions with them, disclosures with them, arm's length, so many questions are there. So that we'll be discussing today. So I hand over this session to the moderator, and all the best for the learning to all the members out there. Over to Asha ji for taking the session forward.
Thank you, sir. Namaste and very good evening to everyone. At the outset, first of all, I would like to thank the Accounting Standard Board of ICAI, its chairman Pramod Jain sir, and vice chairman CA Abhay Chajar sir, and the entire team of ASP for giving me this opportunity to moderate this session on regulatory framework of related party transaction with the intellectual members, including our learned speakers panelist, CA Alok Garg ji and CA Kamal Garg ji. As also said by Chairman sir, that it is a very, very important standard as related party transaction impacts the financial statements and disclosure part of almost all range of business entities, whether it's a corporate or non-corporate, listed or non-listed, or at this time, although annual financial results of most of the listed companies has already been published, but many private limited companies, other non-corporates are still preparing their financials. And also listed companies are required to report these RPT on half-yearly basis or quarterly. That will be deliberated upon by our panelists. So I suppose today's discussion becomes very relevant and very important. Based on the various issues involved, a questionnaire, as said by the promoter, questionnaire has been designed, and it has been designed in a manner through which all aspects of RPT will be explained by a learned panelist. And if there is any query left which our participants want to ask, they can post it, and we will try to cover that as much as possible. So with this, we will start our today's discussion. So my first question will be to you, Kamal Garg sir. We will start with what is the importance of related party transaction? Please.
Okay, so good evening to each one of you, and I'm especially thankful to Accounting Standard Board and my beloved sir, Pramod Jainji, who is kind enough to give me this opportunity. And I welcome my co-panelist, Alok Garg as well. And Asha ji ne jo question pucha, whatever question she's asked, is a very, I must say, pivotal question for many reasons. To begin with, you must be aware the data says 85% of enterprises in India are family-controlled enterprises, and they're contributing around 50% of the total employment. Now, when we say importance of RPT, I would put the question in a different manner. What is the harm in having RPT? The harm in having RPT is this is one of the window where you can design the transactions. So you take Income Tax Act, you take Companies Act, you take Benami law, you take Insolvency and Bankruptcy Code. In most of the laws, this aspect of related party transactions is captured. To give you a few instances, you must have heard whistleblower complaints against Sun Pharma. Now, against Sun Pharma, some whistleblower complaints were made whereby certain RPTs were undertaken. And you must be aware, it is a reported news that Sun Pharma settled this case with SEBI under the SEBI laws by paying a hefty penalty of around 2.92 crore rupees. Similarly, if I proceed further with the importance, if you go to Insolvency and Bankruptcy Code, you must be surprised to listen this aspect. Under Section 5, Clause 24 of IBC, the lawmakers have defined who is a party related, but they have not defined RPT. It is not defining, that is, insolvency law is not defining related party transaction. And if you look out Chapter 3 of IBC, stringent provisions are there regarding forensics, transactions audit, vis-a-vis the transactions which have taken place with parties related. I can quote some more examples. If you refer JP Infratech Limited matter, Supreme Court upheld that certain transactions between JP Associates Limited, which is the holding company, and JP Infratech Limited, which is a subsidiary company, were preferred transactions. Now, these transactions which were preferred were not properly disclosed in the financial statements. If I proceed further, if I give you some more examples, NCLT Allahabad in JR Agro Limited case, what it was upholding, that if holding company has given some loans to the subsidiary company, and these loans are not having any demeanor or any contract of repaying back, in that very case, that loan in substance is equity transaction. So this was upheld by NCLT Allahabad in JR Agro case. So if I am holding company and there is a company with subsidiary, I gave it a loan, that is known as funding transactions. I made the funding as a holding company, as a parent company, without any intention of getting it back. So primarily it is a kind of equity transaction that was upheld by NCLT Allahabad. And if you know, if it is taken as equity transaction, it will travel into the last waterfall scenario under IBC. Now, why this is important? This is important for a very big reason. The reason is, whatever funding activities you are taking place, those funding activities are not properly disclosed. I emphasize the word disclosed in the financial statements, number one. Number second, these are not appropriately reported as well by the statutory auditors under para number 3, subpara 13 of CARA 2020. Why this is emphasized, the word disclosed? Section 188 of Companies Act, I repeat, Section 188 of Companies Act has given a list of related party transactions. If you refer those transactions, although there is a separate question coming up, if you refer those transactions which are listed in section number 188, loan transactions are not covered. Equity transactions are not covered, but those loan transactions and equity transactions are covered by accounting standards. So most of the professionals are under confusion. Shall we consider RPTs as per Companies Act, or as per accounting standards, or as per SEBI LODR? So this is the importance. The importance is this RPT scenario gives you a kind of window or a mechanism whereby due to either malified intentions or due to difference of opinion, the transactions may not be properly disclosed and hence not properly reported. So some more questions would be coming up where you will be getting more in-depth. Yes, Asha ji.
So, like Alok ji, just as Kamal sir has said, he's also said ki like IBC is there, which have defined related party but not related party transaction. Companies Act is there. So I just want to ask, what are the various statutory and regulatory requirements which govern the disclosure of related party transactions for corporates as well as for non-corporate entities?
First of all, good evening, everyone. And I'm thankful to ASB for organizing the highly focused and most ignored topic, which is regulatory framework on RPT, which is need of the hour. And I would say, talking about the statutory compliances, so I would say that if I should talk about for a huge listed company, so there is a requirement compliances of related parties. So coming to the statutory or regulatory requirements, so I will classify this requirement into three parts. If we talk about non-corporate entities, so accounting standard 18 is applicable for related party transactions. If we talk about entities which are companies, if you talk about companies which are not following Ind AS, which are preparing their financial statement as per accounting standard, again, accounting standards are applicable, and section 177 and section 188 of the Companies Act 2013 is applicable. If that company is a listed company, in that case, regulation 23 of the SEBI LODR 2015 is applicable, which is amended just now, avoid this notification dated 9th November 2021. And if there is an entity which is a company and on which Ind AS is applicable, in that case, Ind AS 24 is applicable from the accounting standard perspective. From the Companies Act perspective, section 177 and section 188 is applicable. And from the, if it is a listed company, again, regulation 23 of SEBI LODR 2015 is applicable.
Like there are various regulatory authorities which govern the requirement of this RPT. So Kamalji, my next question will be to you. Can you please explain and point out what are the differences in disclosure requirement for different type of entity, like listed entity, non-listed, private limited, non-corporate?
So one question with multiple sub-questions. So I would say to discuss this answer, we can divide the answer into some segments. I will cover with the listed entities first of all. So when we cover listed entities, we have to understand the word disclosure. Disclosure word is different from reporting. Now for listed entities, Schedule 3 by default requirements are there in Schedule 3. They are applicable. You have to disclose those things in notes to accounts below Schedule 3. Number second, because it's a listed entity, Ind AS are applicable, and hence whatever disclosure requirements are there in Ind AS 24, they also need to be disclosed. Number third, here comes the main point. Number third is, besides Ind AS 24 and Schedule 3, the listed entities are also required to disclose RPTs by filing information in a prescribed manner to stock exchange. So those who are listening me, they can take a note of two regulations, regulation number 27 and regulation number 23. By virtue of these two regulations, certain disclosures are required to be complied with by the listed entities. I'm saying again, it's a disclosure requirement. Number four, if I again say about listed entity, we have Schedule 5. Schedule 5 of listing obligations and disclosure requirements regulations. Under Schedule 5 again, we means the listed entities have to disclose some information about related party transactions. So ultimately what is happening, if I say in a single sentence, listed entities need to comply with normal guidelines, normal regulations plus LODR. So what is normal? Normal means in standards. Normal means Schedule 3. Normal means different opinions given by ICAI, which is popularly called as ITFG. That is Ind AS Transition Facilitation Group Bulletins. Now, beyond this normalcy, what is required is LODR. So like my co-panelist, Dr. Alok Garg also stated, on 9th November 2021, the regulations, that is listing obligations and disclosure requirements, were amended. So by virtue of those amendments, certain additional disclosure requirements have been inculcated in LODR under regulation number 27 and regulation number 23. If I correctly remember, it must be regulation 23.9. So those disclosures are also required to be made to exchanges. Now, why I emphasize the word stock, why I emphasize the word statements? When you disclose in financial statements, you are disclosing to public at large or only the shareholders? Any answer? When you disclose something in financial statements, you are disclosing to public at large or only to your shareholders? Ashaji, can you check? Somebody has replied?
No, sir, no one has replied to this.
So what you need to understand, when you disclose something in financial statements, we need to understand what these financial statements are. These financial statements are general purpose financial statements. So when we say general purpose financial statements, it means that you are disclosing to stakeholders at large, whosoever is connected with your company. It could include investors also. But when you're filing to stock exchange, once the document is filed to stock exchange, it is a public document. And because it's a public document, it can be used by anybody. He or she may not be a stakeholder. And that is what the difference lies in, nothing but your disclosure requirement. Now coming to the second sub-question, disclosure requirement for private companies. So for private companies, it all depends. It all depends whether this private company is a subsidiary or a JV or associate of a listed entity or not. If that private company is a subsidiary, associate, or a JV of a listed entity, it also needs to comply with Ind AS. So Ind AS 24 disclosures are required. And the corresponding listed entity will also make some disclosures, as I stated earlier. If that private company is not a subsidiary, associate, or a JV of a listed entity, then obviously what is applicable? Accounting Standard 18, that is related party disclosures, Schedule 3, Part 1, Division 1. Now I need to add something. I need to add something that whatever you are disclosing in Schedule 3, these are the minimum requirements in Schedule 3. Accounting standards will override Schedule 3 requirements. That we need to understand. Then is unlisted entities. Unlisted entities more or less will be on the same footing as private limited companies. But yes, again, I must say, if that unlisted entity is a subsidiary, associate, or a JV of a listed entity, the same thing which I discussed for private limited company will be applicable to that unlisted entity also. I need to ask one question to the moderator as well as the listeners. The question which was asked to me is disclosure requirement difference for listed entities, private limited companies, and unlisted entities. So what is the distinction between private limited companies and unlisted entities? And before any answer comes up, the other sub-question was a non-corporate entity. So non-corporate entity could be HUF, could be society, could be trust. So for that purpose, the Institute of Chartered Accountants of India, if my memory serves me right, way back on 31st March 2021, made an announcement of applicability of accounting standards to non-corporate entities. So in that very announcement, the enterprises were classified into 4 levels: level 1, level 2, level 3, level 4. Accounting standard is applicable to level 1 and level 2 enterprises. Accounting standard 18 is not applicable to level 3 and level 4 enterprises. As far as Schedule 3 is concerned, Schedule 3 has nothing to do with the non-corporate entities because these non-corporate entities are not the part of your company set. So this is the difference on a broad note. But yes, one question still is pending, the distinction between private limited entity and unlisted entity. So what I correctly understand from this question, this unlisted entity is nothing but LLP. So LLP may fall into unlisted entity for that very matter. And if it is LLP, up till now, the central government is yet to announce or notify the accounting standards under Section 34 capital A of LLPA. Till it is notified, the LLPs need to comply with the accounting standards announced by ICAI for non-corporate entities. But yes, I must say again, if this LLP is a subsidiary of a listed entity, then the question arises whether this LLP need to comply with Ind AS or not. For that purpose, we are having some more questions to come up. We can discuss there. So Ashaji, I believe this question answer is quite convincing. If there is any question from the audience, you can ask.
Yes, absolutely, sir. And connected to this, Alokji, if you would like to add which level of, like Kamal said has already said, level 3 and level 4 not applicable, AS 18 is not applicable. Right. So can you explain ki what exactly AS 18 need to be complied with by the non-corporate entities?
So although the question has already been asked by my co-panelist Kamal Garg, and he has rightly mentioned that on 31st March 2021, so these non-corporate entities have been classified into 4 parts: level 1, level 2, level 3, and level 4. Just to brief about this level 1 and level 2 entities. So level 1 entities are those entities which are having a turnover of more than 250 crores or borrowings of more than 50 crores, right? So the limits were revised on that day. And level 2 entities are those entities which are having a turnover of more than 50, but of course up to 250, and borrowings of more than 10 crore, but of course it is up to 50 crores, right? Because exceeding 50 will come under the category of level 1 entity. And level 3 is entities which are having a turnover of more than 10 crores, but up to 50 crores, or borrowings of more than 2 crores, but up to 10 crores. And below that, the level 4 entities comes in. So on level 1 and level 2, AS 18 is applicable in its entirety. There is no exemption as such. And on level 3 and level 4, there is no requirement of any compliance from AS 18 perspective. Coming to AS 18, so AS 18, the title of the standard is related party disclosures, right? So this standard talks about, first of all, if I'll bifurcate the title, so there could be 2 words which comes in. One is related party. So first of all, it is talking about a person or entity who is a related party. The second one is disclosure. So what sort of disclosures? So if an entity or a person is making any transaction with that entity who is a related party, the transaction is required to be disclosed. So just to sum up the requirement of AS 18, it talks about, first of all, you have to identify what is related party, who is related party, because this is a bigger question: who is related party, what comes under the related party, and that what kind of disclosures, what kind of transaction is required to be disclosed in the financial statement. So it talks about the identification of related party, and it talks about the disclosure of related party transaction with what is not in the scope of this standard and which transactions are getting exempted. I hope I have given the sufficient reply or response to this question, Asha ji.
Look, ji, one connected question ki as per AS 18, who all are covered under this related party definition?
Sure. So first of all, under AS 18, who all are related party? So just to talk about the meaning of related party, first of all, any entity. Let's talk from the entity level, because related party are either a person or it is an entity. So any entity, if it is controlling another entity. So when I say it is controlling another entity, it means I'm talking about the subsidiary of that entity, or that entity is controlled by another entity. It means I'm talking about the holding of that entity. If this is the entity, so its holding company and its subsidiary company is covered under the related party. Second, if there is a common control, when I say common control, it is just like a sibling. So I'm talking about fellow subsidiary. So holding company, subsidiary company, and fellow subsidiary company are related party. Coming to the next, associate company. When I say associate, so if someone is investor and he has invested more than 20% in another company, or there are some criteria, if that entity is satisfying those criteria, we can say that there is a significant influence and the next entity will become an associate. So associate or joint venture company is also comes under related party as per AS 18. Now on the third front, so in the first 2 part, we have talked about the entity, right? Now I'm talking about the person. If a person is having a significant influence or having a control, for example, a person is having more than 50% stake in a company, right, in an entity, so that person becomes a related party to that entity. Or a person is having a significant influence in that entity, that person will again become a related party to that entity. Once a person will become a related party, its relative will also become a related party. I am a father, we are related party. If I talk about if I talk about son and daughter, the related party, right? He is a related party or she is a related party, and his or her relative will be a related party. Fourth, KMP, key managerial personnel, key management personnel, and their relatives are also related party to that entity. And who is a KMP? So KMP is a person who is having an authority and responsibility for planning, directing, and controlling the activities of the entity, right? So if a KMP is a related party, and who could be the KMP as per accounting standard? Managing director could be a KMP. Manager could be a KMP. When I say manager, it is not a designation in the companies, right? This manager is coming from the Companies Act 2013. Whole-time director could be a KMP. CEO could be a KMP. CFO could be a KMP from the Companies Act, right? So if these two persons, KMP and their relative, and the person and their relative, if these two persons along with their relative is having a significant influence in any other entity, so that entity will also become a related party. So this is the definition as per accounting standard 18.
Okay, thank you, Alokji.
No, just one point here, Ashaji.
Yes, sir.
Just to add one point, what has been observed sometimes, there is another board in institute, which is the Taxation Audit Quality Review Board, where tax audits are being reviewed. So there also some reporting is there for the related party under income tax, that is 48(2)(b). So there, what we have seen in certain cases, that what are related parties, certain companies take the related party which is given as per the AS 18 or Ind AS 24 and not as per 48(2)(b). So one has to be very clear when we talk about related party, the definitions are given at three places. One is in the standards, second is in the Section Companies Act, and third is under 48(2)(b). So for respective disclosures, for income tax, only the definition given under 48(2)(b). For standards, only Ind AS 24 or AS 18. And for Companies Act 188, only Section 2, subsection 76. You cannot intermingle. Some persons could be similar, but we have seen certain cases that वो कहीं से किसी की भी definition ले लेते हैं, जिसकी है वो वहीं पे रहे. Just wanted to add that.
Yes, absolutely, sir. So one has to be very careful where he is reporting on which document. Like if it is a 3CD, then 48(2)(b) of income tax should be taken care of, and if it is a financial, then obviously AS 18 or Ind AS 24 as may be applicable. So, Kamal sir, I have two connected questions with you. Like Alok sir just explained related party as per AS 18. He talked about control, joint control, significant influence. So I want to please explain these terms, what these terms actually means, and also what are the related parties as per Ind AS 24.
This question is a 16 marks. Okay, so I will first explain the definition of party related as far as Ind AS 24 is concerned. What we need to understand, under Ind AS 24, for being a party related, we need to segregate two, I must say, identities. One is the person and second is the entity. So just focus on my words and I will be asking you some questions which will be quite pestering for each one of us perhaps. So what Ind AS 24 says? Ind AS 24 part number 1 says, I mean the person part, a person, now be very focused, a person or close member of that person's family. I repeat, a person or a close member of that person's family shall be a party related if that person, let us stop here. So isko jara samajhte hain through an example. So Kamal and one entity is, let us say, ABC Private Limited. Kamal and ABC Private Limited will be related if Kamal is having some relation with ABC Private Limited. Now, what kind of relation I can have, I will discuss separately. I repeat once again. Kamal and entities ABC Private Limited. So Kamal and ABC Private Limited will be related. When they will be related? When Kamal is having some kind of association with ABC Private Limited. Now that some kind of association I will enlist after some moments. Number second case. Let us assume for the time being, Dr. Alok Garg is close member of my family. If Dr. Alok Garg is close member of my family, then just see how the scenario will be built up. Dr. Alok Garg will be deemed as related to ABC Private Limited. Dr. Alok Garg will be deemed as related to ABC Private Limited if Kamal is having some association with ABC Private Limited. Are you trying to understand? I repeat once again. Dr. Alok Garg will be deemed as related to ABC Private Limited. But when when Kamal would be having some kind of association with ABC Private Limited. Listen my first sentence once again. Be very attentive on this word that. So what Ind AS 24 says, a person or close member of that person's family is related to a reporting entity if that person, that means the close member of my family will be related only when I am having some association with the entity. Entity here means ABC Private Limited in my example. Having said that, what is that some kind of association? So if Kamal is having control, over ABC Private Limited, then ABC Private Limited and Kamal are party related. Now what is control? I will tell you separately. Similarly, if Kamal is having control over ABC Private Limited, and because Dr. Alok Garg is close member of my family, in that very case, Dr. Alok Garg will also be deemed as related to ABC Private Limited. So meaning thereby Dr. Alok Garg's relation with ABC Private Limited is dependent upon mine association with ABC Private Limited. Having said that, the things will be quite easy afterwards. Kamal will be deemed as related to ABC Private Limited if number second, first is control. Number second is if Kamal is having joint control of ABC Private Limited. So first aspect is control, second aspect is joint control. Number third, Kamal will be deemed as related to ABC Private Limited if Kamal is having significant influence over ABC Private Limited. So first word was control, second word was joint control, and third one is significant influence. I will discuss these three terminologies after some moments. Having said that, if I put it in a different angle, Dr. Alok Garg will also be deemed as related to ABC Private Limited because Kamal is either having control or joint control or significant influence of ABC Private Limited. Having said that, now whatever I'm going to say is not there in Accounting Standard 18. What does Ind AS 24 says? Kamal will be said to be related to ABC Private Limited if Kamal is a member of key management personnel. Now please be focused. If you remember, Dr. Alok Garg, when he was discussing about AS 18, he stated that as per AS 18, KMP is related. I agree. But Ind AS 24 is giving some broader horizons. Ind AS 24 says a member of KMP is also related. Now, for example, if I am managing director and Dr. Alok Garg is a member of KMP, then he will be deemed as related. Now the question arises, how can Dr. Alok Garg be a member of KMP? Any answer? Maybe from the audience side, or maybe from the moderator side, or maybe Dr. Alok can help me with the answer. How can Dr. Alok be a member of KMP? Keep on thinking. I will come to this question in a moment because one aspect is pending. A person, that is in my example, Kamal or Dr. Alok Garg as a case may be, shall be deemed as related to ABC Private Limited. That is aspect number 5. If Kamal is a member of KMP of the parent. So in Accounting Standard 18, only KMP of the entity is covered. But in Ind AS 24, the KMP of parent entity is also covered. So if I'm having the holding company and I am the managing director in my holding company, then being managing director in the holding company, I will also be deemed as party related to subsidiary company ABC Private Limited. That means the KMP of my holding are also deemed as related to the concerned or the corresponding subsidiary company. So that is what the additional aspect is in there in Ind AS 24. But one thing is still pending. The pendency is how come an individual become member of KMP? Alok ji, can you help? Or Asha ji? If I am told right, these tough questions were prepared by you.
Yes, you are right, Kamal ji.
So this will cover virtual CFO services. So like for example, Dr. Alok, me and Asha ji, we are having some entity. We are having some management consultancy firm. Let us say the management consultancy firm is XYZ. Now this XYZ is providing virtual CFO services. Now in that very case, this virtual CFO will be deemed as KMP of the corresponding ABC private limited company. So now we all four are the members of that entity, and that's why it is known as member of KMP. And that means we all four will be deemed as related to ABC private limited. This is one part of Ind AS 24. What is this part? How individual could be deemed as related. Second part is how an entity can be deemed as related. Now for that, how entity can be deemed as related, this is more or less similar to what Dr. Alok Garg has stated. Holding relationship, subsidiary relationship, associate relationship, JV relationship, and so on. So this is what broadly Ind AS 24 says. Now the second part of question, which our moderator Asha ma'am asked, definition of control, significant influence, and joint control. We must understand Ind AS 24 has not defined what is control, has not defined what is joint control, has not defined what is significant influence. It has only stated that the words control, joint control, and significant influence shall be defined as per the corresponding standards like Ind AS 110, Ind AS 28, Ind AS 111. What we need to understand before I go to definitions, the expression control and significant influence is also defined under Companies Act. I repeat, the expression control and significant influence is also defined in Companies Act. Just few moments back, our chairman ASB stated one very good thing, that you have to define and confine party related with the respective literatures. So question arises, if you are complying with the accounting standards or Ind AS, which definition you will take up for control, joint control, and significant influence? Accounting standards definition or Companies Act definitions? The answer is quite simple. The definitions given by applicable standards. Now, having said that, what Ind AS says, please be careful. Ind AS 24, when defines control, is not dealing with voting power. I repeat, Ind AS 24, when defines control, is not dealing with voting power. That means, as per Ind AS 110, I can have control over you even without having voting power, or the majority voting power, I must say. How does Ind AS 110 defines control? It says that control exists when investor is exposed or is having right to variable returns from its involvement with the investee and has, the word is and has the ability to affect those returns through its power over the investee. As a layman, if the company is ABC Private Limited and I'm holding only 1% equity, Companies Act will say you don't have any control. AS 18 will say you don't have any control. But Ind AS 24 say that you can have control, provided after holding this 1% equity, I have that much of ability that I can direct the activities of this investee entity, whereby the returns, that is the profits of that entity, can be affected by my prudence. In that very case, I will be deemed to have control. So what you need to understand, Ind AS 24 is not moving on voting power. Ind AS 24 is moving on ability of me to variate the returns that can be expected from the investee. Number second is joint control. Joint control is not defined by Companies Act. Joint control is not defined by Ind AS 24. They have given the reference to the corresponding Ind AS, that is Ind AS 111. Ind AS 111 defines joint control. And what is the definition? Joint control. Now see this word. Joint control is contractually. So joint control always arises because of a contract. So Dr. Alok and me have a contract whereby we are going to exercise control on a joint basis. What kind of control? Joint control is a contractually agreed sharing of control. So we are sharing the control of an arrangement which exists only when decisions about the relevant activities require unanimous consent. Unanimous means Dr. Alok should also say yes, I should also say yes. So when we are having both on same tangent decisions, unanimous consent is there. So we have a contract. Under a contract, the stipulation is there must be unanimous consent. In that very case, it will be deemed as joint control. Then a significant influence. Significant influence is the power to participate. Please be focused. The words are power to participate. If you remember, and it is quite appreciable also, that Dr. Alok Garg, when he was defining KMP, He used two words. KMP is a person who is having accountability and responsibility. But when you come to significant influence, the words used are power to participate. So power to participate and power to vote are two different things. So I will be having significant influence if I do have the power to participate in the financial and operating policy decisions of the industry. So if there is a board meeting, I'm sitting over there and the people listen me, allow me to speak in the board meeting, and they honor my words. I am having power to participate irrespective of my power to vote. If you go to Companies Act says, and the same thing is there in India also, it will be deemed that significant influence is present if you're holding 20% or more than that of the voting power. But this presumption is rebuttable presumption. If you wish to note down section number 2, clause number 6 of Companies Act. Section number 2, clause number 6 of Companies Act explanation gives the definition of significant influence. Similarly, if you go to Companies Act, section number 2, clause number 27 gives the definition of control. So I believe, Ashaji, this answer is complete from my side. If you have any doubt or audience have any doubt, you are most welcome to ask.
Nahin, Kamalji, the way you explained, it includes everything. But the only thing which the members would be thinking about is that when you said in the case of Ind AS, even there could be a case where 1% shareholding could be having a control over that, as per the definition given as per the 110.
Ind AS 110.
Now, doesn't it make too subjective? It is too subjective and too litigative. The company says that no, there is no RPT. The regulator says no, there is an RPT. Then who is going to prove it? So it could be leading to lot of, because RPT is in the minds of all the regulators. Because as initially you said, so this subjectivity is there. I don't know how these are being handled.
That is the reason, Jain Saab, if you refer insolvency cases, most of the litigations are propelling beyond this definition of control. That is that 1% scenario. When I referred JR Agro case, NCLT Allahabad, most of the things in that very judgment was surrounding around this 1% scenario only. But yes, you are very right. Subjectivity is there.
Huge. Chaliye, aage chaliye.
Yes.
Sir, Alok ji, we can have a connected question with this. Like abhi jaise Prabhu sir ne bola, it becomes a very subjective definition ki whether he has power to participate or not. What is your opinion on how to prove that a person can impact or has actually impacted a decision making?
Yeah. So again, this question is very subjective question, that how it can be proved that whether that person impacts a decision making. As Kamalji has rightly mentioned.
Question is not subjective. Answer may be subjective.
Yes. So answer to the question is very subjective. So as Kamalji has rightly mentioned, that when you can impact the decision making, so when you have a power to participate, right? If you don't have power to participate,
मेरे ख्याल से some
activity
technical glitch at Alok ji. So Alok, Kamal ji, you can take it forward.
Can I take a question?
In the meantime, Alok ji could be joining.
Okay, so as Alok ji was saying, I will continue the same words. The answer to this question is subjective. How to prove? So for that proving part, I would suggest first thing is dependent upon your professional wisdom. Number one. Number second is you can always refer OECD guidelines. So if you will refer OECD guidelines on transfer pricing, you will get a good material to have the, I should say, to have the checklist being prepared to prove that aspect. To give an example, you can always set a benchmark, comparable benchmark, and that comparable benchmark would be useful. Number third, Dr. Alok has joined, so I will complete this sentence, then Dr. Alok can continue. Number third is
you can continue, Kamalji, because there was a technical glitch from my side, so I just saved my connection. Yeah.
So I am completing only 50% answer from your side, 50% you will cover. And third is we can always refer, for the sake of persuasive scenario, SA 550. SA means Standard on Auditing. And I must say our SA 550 is there since ages. but we are not referring it. For example, if you remember, when I was defining party related, I used the words close members of the family. These words close member of the family are highly debated. Even today we will debate. But these words close member of the family are there in SA 550 right from ages. SA 550 has also given some guidance how to identify or how to come to a conclusion on a persuasive basis, obviously, whether there was anything fishy or not. That kind of subjectivity, I would say, cannot be eliminated, but can be brought down to an acceptable level. So, balancing, Dr. Alok can continue.
So in my opinion, again, as rightly mentioned by Kamalji, so of course SA 550 is there, but again you have to see whether that person has a right to participate or not, right? That is the first thing. And the second thing, recently we have concluded a concept of de facto control in our company, right? So in case of, so de facto control is again a new concept in Indian accounting standard, not in accounting standard, where a person who is the largest shareholder can have a de facto control in another entity, right? So when we are evaluating a de facto control, we have seen that, you know, what is the quorum of the shareholder who is always present in the meeting, right? For example, 90% of the shareholders is there, right? So what should be the 50% of the 90%? It is 45%. So anyone who is having more than 45% of stake in another company can have a de facto control. I am talking about that particular company. So how to prove that the person impact decision making? Of course, it's a very subjective, whether that company has a independent board or the company has a non-independent board. For example, in case of a listed company, the company has an independent board, right? And that particular agenda or that particular item has to be, you know, passed by, let's say, 50% of the independent directors, or let's say 75% of the independent directors. So it doesn't matter if there are some promoter shareholder who are sitting on the board as a promoter director, right? So even though it doesn't matter whether they will say yes or no to that decision, it will not impact the decision making, right? So in that kind of scenario, we can say that the decision making from that person will not impact the decision making capacity in that particular board, right? In that particular scenario. So this item is again a very subjective item. So it will require a professional judgment. It will require a past precedent that what is the presence in the board and whether it is an independent board, professionally managed board, or a promoter driven board. So this is my take on this question. So Kamalji, if you want to add anything, because of course
I added about when you were managing, I added that we can always refer OECD guidelines.
Right.
So OECD guidelines have given a good material to identify which transactions are good or which transactions are suspicious. So OECD guidelines could be useful. Then we have SA 550. When you joined, I was discussing SA 550. So those materials we have to have.
Right. Okay.
The thing is that we have all the materials, and it is up to our professional wisdom how we are going to prove our case.
Exactly.
Yes,
that has to be done.
And that, you know, Ashaji, this debate is since long. If you refer other things like fair value counting, Ind AS 113, the biggest debate of this planet nowadays is how fair is the fair value. The same thing is here also. How far the party related transactions are in fact at arm's length or not.
Absolutely, sir.
So litigation is going on, and perhaps this is a kind of professional challenge as well as opportunity.
Yes. Alokji, although Kamal sir has beautifully explained the related party under Ind AS 24, and he has also explained the difference as compared to AS 18. If you would like to add anything else, or we will go for other.
So, so you are right. Kamalji has beautifully explained the difference. So, of course, the definition of relative. So, the word relative is used in AS 18, and in Ind AS 24, the word close member of the family of a person is used, right? And the close member of the family of a person is again it's a kind of a very extended or a wide term in comparison to a relative, right? Because it includes a domestic partner concept as well. So we will discuss that concept. And Kamalji has already mentioned that the KMP of a parent is also required to be, you know, is also covered under Ind AS 24, but under accounting standard only KMP was covered. I think one theoretical part is also there, post-employment benefit plan. For example, if an entity is having a post-employment benefit plan, and if it is related to that, right? So that is also covered under Ind AS 24, but it is not specifically required under accounting standard 18. And coming to the next most senior parent, because for example, or I can say that ultimate controlling entity. So in Ind AS 24, an entity is also required to disclose the ultimate controlling entity or next most senior parent who is producing the consolidated financial statement. That is one requirement which is there in Ind AS, and this requirement is not there in Accounting Standard 18. Otherwise, I can say that AS 18 and Ind AS 24 is having a same name, same title, related party disclosures. No much change apart from the definitions, and these are the small differences between these two standards.
Okay, sir. Next, I would like to ask Kamalji. Sir, can you also elaborate on, is there any difference between Ind AS 24 and IAS 24?
Yeah, differences are there, Ashaji.
Yes.
So as far as Ind AS 24 is concerned, we need to understand that Ind AS 24 is a converged version of International Accounting Standard number 24. One difference is very prime difference, not a very major difference, that Ind AS 24 uses the words in a different fashion. So like if I say different terminologies are used in the standard, for example, the term balance sheet is used instead of statement of financial position. So if you refer International Accounting Standard 24, it uses the words statement of financial position, but if you come to Ind AS 24, it uses the word balance sheet. Then what you need to understand, if my memory serves me right, there is paragraph number 24A. Paragraph number 24A of Ind AS 24 is slightly amended. Although the number is same in both the standards, but it is a slight amendment in para 24A of Ind AS 24. This paragraph provides additional guidance on a clarificatory basis regarding aggregation of transactions for disclosure. Now, what is aggregation of transaction? We are having a separate question to discuss, but yes, aggregation of transactions have been slightly modified in Ind AS 24. Moreover, when you refer Accounting Standard 18, the words used are state-controlled enterprises. And the word government and government entities are not properly defined, or I should say are very confining way defined. But in this Ind AS 24, the expression government controlled enterprise or government is quite extensive, and it also includes international agencies for that matter. The definition of close members of family of a person is also amended. So if you refer IAS 24, the definition of close member of family is very confined way. But here it is amended. And after amendment in para number, if I correctly remember, para number 9 must be there. Para number 9 Ind AS 24 defines close member of family in quite extensive manner, and it has included brother, sister, father, mother, and other family members who may influence or are expected to influence the person who is having the relationship with the enterprise. So these are major differences. But I must say, one of the difference which always we need to ponder, one of the major difference which we always need to ponder is in Ind AS 24, disclosures which conflict with confidentiality requirements of some statute or any other legal requirement are not required to be made, since accounting standards cannot override legal or other regulatory requirements. This kind of principle is not there in IAS 24 on confidentiality basis. So if there is a kind of regulatory requirement, and that regulatory requirement prohibits you to disclose something in notes to accounts as a matter of RPT, then you cannot override that statutory requirement. But this kind of confidentiality aspect is absent in IAS 24. So these are the major differences.
Okay. Now it comes to Alokji. So there is a term which we have used anytime, like close member of family. It has already been explained by Kamal sir. There is another word used, domestic partner. So what does this domestic partner include or means? Apart from this, whether ex-spouse, stepson, stepdaughter, or children from previous marriage, adopted children, are these also covered under related party? And you can differentiate it with AS 18 or Companies Act or Ind AS 24 different.
Yeah. So again, I would like to reiterate the meaning of close member of family of a person, right? So I have bifurcated this definition into three parts. So first of all, from the person perspective, right? So who are the close member of the family of that person who is related to the reporting entity? For example, if I'm talking to myself, for example, I am related to an entity. So who could be the close member of the family of a person, right? So from that person perspective, spouse, husband or wife is a close member of the family of a person. Brother, sister, father, mother, right? So brother, sister, father, mother, spouse. This definition we have also seen in AS 18. Apart from this definition, there is one added concept, which is again a Western concept of a domestic partner. So the domestic partner of that person is also considered as a close member of the family of that person. Now coming from the kid's perspective. So children of that person who is related to the reporting entity, or children of that person's spouse. For example, that person is doing another marriage and he is having another marriage. So children of that spouse, right? That children of that spouse is also a related party, and the children of the domestic partner is also the related party. So children of that person, the domestic partner's children, the spouse children are the related parties, right? From the perspective of close member of the family of that person. Now coming to the word dependent. So any dependent of that person's spouse or domestic partner will be considered as a close member of the family of a person, right? So this complete parivar will be considered as a close member of the family of a person from the perspective of Ind AS 24. Now coming to the meaning of the word domestic partner. The domestic partner definition is not there in Ind AS 24. It is not there in Companies Act. But what is meant by domestic partner? Domestic partner means it is kind of an arrangement where two persons are living like a married person, and actually they are not legally married, right? So it is like a live-in relationship. So it is known as a domestic partner, right? And now coming to your question, Asaji, where ex-spouse is a close member of the family of a person. So to my mind, if we will see from the related party perspective, if any person or entity is a related party during the year, at any point of time during the year, so that person or entity will be considered as a related party. So when you are talking about ex-spouse, I am understanding this term as they are separated legally, right? They are separated legally. So as per my understanding is concerned, ex-spouse is not a related party. I mean to say not a close member of the family of a person. Now then coming to stepson or stepdaughter, if the person is having another marriage and his spouse or her spouse is having a son or daughter, right? So that stepson or daughter will be covered under Ind AS 24. Coming to the children from previous marriage, again, it will be covered under close member of the family of a person. Then coming to the adopted children, again, it is covered as a close member of the family of a person. So ex-spouse is not covered. Otherwise, stepson, stepdaughter, children from previous marriage, adopted children, these all are covered as a close member of the family of a person.
Sir, is this word
Kamalji,
dependent?
I think Kamalji want to add something.
Yeah,
Yes,
one
Yes,
more
sir.
thing which we need to understand is this word relative for the purpose of standards shall be defined as per standards only, not as per Companies Act section number 2 clause 76.
Right.
Number second, when the question is going on for stepchild, we need to also understand that stepchild is different from adopted child.
Yes.
So question
Yes.
arises whether adopted child would be covered or not. Answer is yes.
Yes. Yeah.
So that is the thing which I need to add.
Okay, sir. Sir, is this word dependent is also defined?
Dependent is
dep-
not defined as far as Ind AS are concerned, but as far as income tax is concerned, we have several judgments how to define this dependency. In my view, when we say dependency can take many shapes. One is financial dependency, one is operational dependency, one is life dependency. So depending upon what kind of dependency is there, we need to identify whether it will be covered by this very definition or not. Because one common thread which connects all these persons is whether these domestic partners are in a position to significantly influence or not. So merely because our relationship is there, it may not be resulting in any kind of related party transaction or a relationship per se.
Right.
So two things are different. One is having the relationship, and second is having the kind of interest.
Another, we have a case study.
Yeah, Alok ji ke
Kamalji,
liye
I
hai na?
would, yes, sir.
Alok ji ke liye hai ye?
आपके
Sir,
लिए.
any of you can want to answer?
Okay, क्या case study hai?
Kamalji, I am putting it to you. For example, there is a company ABC Limited who has two directors named A holding 50% shares and B holding nil shares, 0 shares. This A and B are husband-wife. There is another shareholder C who is holding 50% balance 50% share in ABC Private Limited. Now there is another company XYZ Private Limited XYZ Private Limited also have two directors. One is A, which again holding 50% here also. And another director is Y, who is holding balance 50%. And this Y is spouse of C. C, who is holding 50% share in first company, ABC Private Limited. So the question is ki whether Y will be treated as related party for ABC Private Limited, where his spouse is holding 50% shareholding.
Answer is yes. Because because the shareholding is 50%, so I presume significant influence is present, and because close member of the family is associated with him, and hence it will be deemed as a party related one.
And this AS 18 doesn't talks about close member of the family. So
In that very case, relative, as a matter of relative, she would be covered.
Okay. And another link question is whether ABC Private Limited will be treated as related party of XYZ and vice versa.
Here I presume because each one is having 50% shareholding, so there is a joint control. I'm presuming that thing. And because of joint control, if my memory serves me right, it must be clause number 6 of para 9, जहाँ पर इसको हम cover कर सकते हैं joint control वाले clause के अंदर. So it will be related here also.
Okay, Alok ji, would you like to add?
Yes, even I am having the same view. So as per AS 18 also.
Just one thing. Yeah. We are presuming that husband spouses are having significant influence over each other.
Over the entity.
Yes.
Husband is having. Sir, वहाँ तो influence नहीं है, control है.
नहीं, control. At one place, the person is a spouse and not holding the shares. And other process he is having in company A, C is the shareholder and not a director.
Yes.
In company Y, in the another company, Y whose spouse of C is the shareholder and director.
No, sir. Let me come again. Definition says a person shall be deemed as related if he is having control or significant influence over the entity.
Right.
Definition further says the close member of that person will also be deemed as related if that person. That means if I am related, my relative by default will become related party.
Right.
That is in Ind AS 24.
That is in Ind AS.
But AS 18?
AS 18 is different. In case of AS 18, this kind of dependency factor is not there. In case of AS 18, the spouse must also have the control or significant influence.
So it is not there. It may not be there.
So my question which came from Asha ji was from India's perspective. But if you go to AS 18, obviously it will be remaining out. But yes, again the same thing. The significant influence is a rebuttable presumption. So we need to analyze from that part. Generally in family-owned companies, for namesake, people are taken as directors. But that wife may be participating in the board meetings. तो वहां पर वो मैं एनालाइज करना पड़ेगा कि इन्फ्लुएंस आता है कि नहीं आता.
बट कमल जी, मेरा यहाँ पर एक व्यू है कि जैसे इफ अकॉर्डिंग टू AS 18 ऑल्सो, सो AS 18 भी कहता है कि अगर इंडिविजुअल का कंट्रोल या सिग्निफिकेंट इन्फ्लुएंस है, फॉर एग्जांपल इन द फर्स्ट कंपनी, सो देयर इज एन इंडिविजुअल हु इज हैविंग अ 50% है, तो प्रिज्यूमिंग की सिग्निफिकेंट इन्फ्लुएंस तो है ही.
Yes.
तो वो 20% के ऊपर हो जाता है, राइट?
Yes.
So we are assuming there is a significant influence. अगर उसका इन्फ्लुएंस है तो उसके रिलेटिव भी कवर हो गए.
Yes.
And her spouse is her and his spouse is relative.
Yes.
तो दूसरा जो बोलता है कि KMP और उसके रिलेटिव भी कवर हो गए, जो अगली डेफिनेशन में आता है, उसको भी छोड़ देते हैं.
Yes.
उसके बाद कहता है अगर कोई भी एंटिटी जिसमें ये पर्सन जिनका इन्फ्लुएंस है, तो वो एंटिटी भी रिलेटेड पार्टी बन जाएगी. तो ये दोनों एंटिटी भी आपस में रिलेटेड पार्टी बन जाएगी.
इसमें आलोक जी
पर AS 18.
Yes, इसमें आलोक जी आपके और मेरे में डिफरेंस क्या आ गया? You have taken this director as KMP, and I have taken this person as a normal director. AS 18 talks about KMP and their relatives.
Right.
And if you go to Ind AS 24, there is no such kind of distinction.
Yeah.
They talk about only the person.
Yeah, you are right.
That is the difference which we have to carry from AS 18 to Ind AS 24.
And also one thing more is you said that he is having 50%, so he is having a significant influence. Again, significant influence may not be there. But the one issue, it is a control. So control is 50% or more than 50%?
Sir, control should be on the basis of voting power, more than 50%.
50%.
So he may not be having that control too.
Yes. तभी मैंने उसको significant influence presume किया कि it must be significant influence.
इसमें थोड़े और फैक्ट्स चाहिए होंगे आशा जी.
मतलब कि, but yes, these are interesting case studies where the auditor and the management, both management will be saying something, then auditor would be asking questions and then coming to a conclusion. So important.
With the permission of chairperson, let me add one more interesting point.
Yes.
If you refer SA 550, which is meant for statutory audit. Now SA 550 defines party related. Now what they are saying, with the party could be related in this very manner. So I am skipping the irrelevant portion, which is irrelevant for our discussion. Now, interesting portion. It says that SA 550 says that another entity that is under common control with the reporting entity, another entity that is under the common control with the reporting entity by virtue of having common controlling ownership. So words are common controlling ownership, or number second, owners who are close family members, and number third, common key management. So common controlling ownership, common owners having a close family members relationship, and common key management. So it means that if you go to SA 550, it travels beyond accounting standards also.
Yes, interesting.
Which is quite comprehensive. Now the management of whom we are doing the audit, they always will be having this kind of view कि क्या हम आपका एसए माने या अपने एएस माने.
That is what I was going to ask.
नहीं, essays are also again notified by the central government now.
Yes, 143(9) लग जाएगा, 143(10) लग जाएगा. They have to comply.
And these two companies will also be deemed to be related parties?
Yes, they would be. They would.
Okay. Now the next is regarding this, continuing with this example only. Under what circumstances the spouse shareholding to be treated as owned indirectly by the who is actually director?
ये क्वेश्चन किसके लिए है?
You can answer, sir.
You तो plural word हो गया ना, इसमें आलोक जी और मैं दोनों आ गए.
Kamal ji, you can answer.
Okay. So for this purpose, our Ind AS and accounting standards are silent, and for the benefit of audience, I am quoting a case law, decided case law. You can take a note of this one. BATS, BATTS, BATTS, COMB, COMBE, query, QUARRY, BATS, COMB query versus Ford, FORD. In BATS, COMB query versus Ford, it was decided that if shareholding in the entity is not held by the director, but by the relatives, then the word indirectly will cover that very shareholding. Or in much more simple sense, shareholding by the relatives will be falling within the ambit of indirect shareholding. And you can take one more note. MCA circular, that time it was DCA, Department of Company Affairs. So Department of Company Affairs, when it was Old Companies Act, for the purpose of section number 297 and 299, that very time, MCA issued a circular. I am not able to recollect the date exactly, but circular number I remember. So you can take a note of that circular. It is F number 8/33. F means file number 8/33 within brackets, within parenthesis, 299/65. Or in much more simple sense as a layman, by virtue of this BATS COMB query case and MCA circular, that time it was, I told, DCA, Department of Company Affairs, these circulars, indirect shareholding will include even the shareholding held by relatives. So when I say relatives, spouse will also be covered, children will also be covered. I believe this is a suffice answer for this question.
Absolutely, sir. Now my next question to Alok ji, whether all type of transaction is required to be disclosed in AS 18 and Ind AS 24, or are there any exception to it?
Yeah. So even Kamalji has given the answer of this question as well. So if there is a transaction with a related party, all the transactions are required to be disclosed except some transactions, right? So as per AS 18 as well as per Ind AS 24. So any transaction, if there is a requirement of a disclosure as per AS 18 and Ind AS 24, and if disclosure of that transaction breaches the rule of confidentiality as per any statute, as per regulator, or as per competent authority. For example, banks are obliged to maintain the confidentiality of the customer, right? So if a customer is a KMP and he has taken a services of bank as a customer, right? So those kind of transactions are required to be disclosed as per AS and Ind AS in the position of a KMP. But as far as RBI is concerned, as far as banking law is concerned, they are not required to disclose as per this particular law, and hence these transactions are not required to be disclosed, right? The second could be, for example, in a consolidated financial statement, there is a transaction between holding and subsidiary. So since these transactions are intra-group transactions, and these transactions are required to be eliminated, and since these transactions are not there in the consolidated financial statement, and hence it is not required to be disclosed there, right? So that is why if there is a transaction between a holding and subsidiary, it is required to disclose in the standalone but not in the consolidated. So this is a common exception in AS and Ind AS. There is one more exception in accounting standard. And what is that exception? So in case of a state controlled enterprises, so what is state controlled enterprises? Where central government and state government is having some stake, right? So in case of a state controlled enterprises, if these enterprises are doing a transaction with another state controlled enterprises, such transactions, this is a related party transaction, but there is an exemption in AS 18. So these transactions are not required to be disclosed. Yeah, Saji.
Yes, sir. Kamalji, my next question will be to you. Like while differentiating between Ind AS 24 and IAS 24, you also mentioned like some of the disclosure requirements which are done away
Your
with.
voice is not audible.
Hello.
आशा जी आपकी वॉइस ठीक है?
Is it okay?
Yeah, please carry on.
Sir. While differentiating between Ind AS 24 and this IAS 24, you mentioned that there are some of the requirements which have been done away with in Ind AS 24. So my next question is regarding that only, which part of that has been answered by Alok ji also right now. So my question is, standard says related party disclosure requirements do not apply in the circumstances where providing such disclosure would conflict with the reporting enterprise's duty of confidentiality as specifically required in terms of a statute or by any regulator or similar competent authority. So can you please give example of this type of
Yes, there could be many examples. I will give some examples without giving the names where it happened, because it is not the right platform to say the names. So number one example could be defense deals. For example, there could be certain companies which are manufacturing defense equipments. Now, those things may not be good for the nation to disclose for public at large. So defense deals, defense contracts may not be disclosed in notes to accounts. And for this purpose, we have some circulars as well. Number second is, let us take an example. One entity was declared as willful defaulter. And because this willful default was under investigation by Serious Fraud Investigation Office. So those people passed a kind of order that until this investigation is going on, don't disclose these things in notes to accounts, because these may hamper or these may create some impediments in the ongoing investigation. So these are two of the examples where statutory requirements can come in between the way of your disclosure practices.
So as I understood, this will be on the basis of either any circular or notification or any order
circular
by that
notification or an
investigating
order.
authority.
Yes.
Okay. My next question to you, Alok ji. As per this AS 18 and Ind AS 24, this RPT reporting is not required in case where regulator or competent authority governing that enterprise prohibited the enterprise to disclose certain information, which is by way required to be disclosed as per the standard, for the reason that disclosure of such information is not warranted. So what could be the example of these type of cases?
Yeah, so I can show you the real life example, and if I correctly recollect, so you can see that in the annual report of State Bank of India. Just allow me a few seconds to open that annual report so that audience can see that annual report on practical basis. So let me know if my screen is visible. Yeah,
visible.
Whether my screen is visible?
Yes, visible.
So let me go to the related party disclosure. Probably it was on page number 178. Yeah. So if you can see the AS 18 related party disclosure of State Bank of India, because on State Bank of India, Ind AS is not applicable. Accounting standard is applicable, right? So I think participants can see on the screen. So it is AS 18 related party disclosure. And just moving on the next page. So parties with whom transactions were entered into during the year. So I will just read the disclosure first. No disclosure is required in respect of related parties, which are state-controlled enterprises as per paragraph 9 of Accounting Standard 18, which I have told that this is one of the exception or exemption which is given in AS 18. Further, in terms of paragraph number 5 of AS 18, which talks about this confidentiality clause, and para 4A or 4B of Ind AS is also talking about the similar clause, right? So transaction in the nature of banker customer relationship have not been disclosed, including those with KMPs and relatives of KMPs. So right. So the transaction with KMPs and relatives of KMPs are required to be disclosed as per accounting standard and Ind AS. But here, since this transaction was like a banker customer relationship, banker customer transaction, and hence in the State Bank of India annual report, they have given a note of this. They have not disclosed the transaction with KMPs in the capacity of a customer, banker customer relationship. I hope this answers your query, Ashaji.
Yes, absolutely, sir. Another is just you just touch upon that part also. Like standard says that intra-group transactions are not required to be disclosed in consolidated financial statement as it gets eliminated. So I want to know that practically, what will be the scenario or under what circumstances transactions of intra-group nature which might be required to be reported in the consolidated financial statement?
Yeah. So although if it is an intra-group transaction, it is between a holding and subsidiary, it will get eliminated and it is not required to be disclosed. But if there are investment entities, right? So as per Ind AS, if there are investment entities which are doing the transaction with their subsidiaries, so in that case, the investment entities are not doing the consolidation of those subsidiaries, and they are recognizing their subsidiaries at fair value through profit and loss. So in this case, although this transaction is between the investment entity and the subsidiary, it is an intra-group transaction, still it is required to be disclosed in the consolidated financial statement. The second one could be in case of AS as well as Ind AS, if there is an intra-group transaction between associate and joint ventures, right? So that transaction is also required to be disclosed in the financial statement. So these are the transactions which are required to be disclosed in the CFS, being an intra-group transaction.
Kamalji, would you like to add anything else to this?
I think Alokji has rightly covered. One more thing which we can cover is ESOP transactions, where ESOP trust is there, structured controlled entities are there, which Alokji also covered as investment entities. So they are not eliminated despite being intra-group. So ESOP guidelines need to be referred for that purpose. And if my memory serves me right, we have clause 22A of SEBI ESOP guidelines, which also says the same thing.
Going with the next question further, this will be for you, Kamalji. How to disclose the transactions, whether in aggregate or individual party-wise or transaction-wise? How we need to disclose it?
So this is a very interesting question. Before I go on aggregation, let me say the words which the standards are writing. Both the standards are writing one thing in common. What they say, items of similar nature, I emphasize the word similar. Items of similar nature may be disclosed in aggregate, by type of related party. Now, three things are quite critical over here. One is similar nature, meaning of similar nature. Number second is disclosed in aggregate, but the word is may be disclosed in aggregate. So it is your option to disclose in aggregate or disclose on line-by-line basis. And how to disclose? You will disclose in aggregate by type of party related. So if I'm having multiple transactions with a subsidiary, I can aggregate them up. But the question arises, what kind of transactions can be aggregated? The standard says similar transactions. Now, please understand the word is similar, not same. The word is similar, not same. So before I proceed further, I would like to have some inputs from Ashaji or Alokji or maybe the participants, if they can, how it makes a difference between similar and same. Because standard is using the word similar.
Same is something identical transaction kind of thing.
And it will be another question, same, similar, identical. Let me put an example and automatically the answer will come up. say I do have, say, 3 subsidiaries, subsidiary 1, subsidiary 2, subsidiary 3. I sold goods to subsidiary 1, number 1. I gave on lease for the purpose of rental income. I gave on lease a building to subsidiary 2 so that I can earn rental income. And number 3rd is, I gave, let us assume, I gave a building without any rental clause to subsidiary 3. Can I aggregate these 3 transactions? Are these similar in nature? At least one thing is same, that these transactions are not same. So are these similar? So from one subsidiary, I am earning via sales revenue. From another subsidiary, I am earning through rental income. And from 3rd subsidiary, I am earning nothing. But the nature of transaction is same. Why the nature is same? Because subsidiary 2 is also having building on lease. And subsidiary 3 is also using my building without any rental payment although. So which of these 3 transactions can be aggregated? None, or all, or first 2?
I think first 2.
First 2.
Yeah.
Alokji, your inputs, whether rental income and sales revenue can be taken as similar transactions? So what I need to understand, when we say similar transactions, the word similar shall be given an interpretation by considering certain elements like functions performed. Now, what is the function performed? One is sales revenue, second is rental. Functions are different. So because functions are different, they cannot be taken as similar. However, let me take one more example to highlight this thing. I sold goods to subsidiary 1 and I sold scrap to subsidiary 2. These could be taken as similar, although not same. So scrap sales to subsidiary 2 and normal sales to subsidiary 1, they are similar in nature, although not same. So what the standard says, add up similar transactions. And that is what the distinction is there. So we will add up none of the transactions in my example. But scrap sales and normal sales could be aggregated because they are similar in nature. And whether to do aggregation or not is dependent not only on transactions, but it is clearly dependent upon type of party related. Type of party related. So if I have subsidiary 1 and if I have, say, associate 1, I am selling goods to subsidiary 1 and I am selling goods to associate 1. I cannot aggregate them up because the parties are different. So aggregation will be done only on party type basis after considering similar nature of transactions. And more importantly, what you need to understand, the standard also says if the transactions are material in nature, then they cannot be aggregated. The problem here is the materiality threshold. The materiality threshold is not defined in Ind AS 24, but AS 18 has given a threshold for materiality. That is, if a transaction accounts for more than 10% of overall RPTs, then they will be deemed as material RPTs. Even if the transactions are similar in nature, they will not be clubbed with other transactions. But this kind of 10% threshold is absent in Ind AS 24. So what materiality you have to define in Ind AS 24 again is on your professional judgment. And for this judgment, you can refer essay number 320 and Ind AS 1 because Ind AS 1 has redefined materiality. So I believe this answer is suffice.
Sir, like you said, as per AS80, this 10% is suggested for materiality of transaction. So this 10% of all the RPT, what does this all the RPT means? Means whether it is related to sale or of any other nature. All has to be consolidated.
All the similar transactions. All the similar transactions.
Okay.
So there could be a scenario like to subsidiary 1, I sold goods. And to subsidiary 2, I sold a property, plant and equipment. Then I cannot add them up because the transactions are not similar in nature.
Okay. Now my next question to you, Alokji. As you also said in the beginning, like regarding RPT disclosure under SEBI guidelines and all, Kamalji also said, what is the definition of related party as per SEBI LODR 2015 and the circumstances under which various kinds of approval from shareholders will be required? And one more connected question with this will be, what are the disclosure requirements of related party transactions under Regulation 23 of SEBI LODR 2015?
Yeah, I think this is 40 marks question, Kamalji. So she has covered everything. So I
Whole
would say
SEBI
as far
LODR
as
is covered.
the complete SEBI LODR has been covered. So I would say, Ashaji, SEBI has done a very wonderful job in defining this related party as per them, right? So they have covered first of all this section 2 regulation 2 subsection sub-regulation ZB of SEBI LODR 2015 covers the definition of related party. So first of all, they have covered, since this LODR regulation is applicable to the companies. So first of all, they have picked up the Companies Act, right? They said, so whatever definition of relative is there as per section 2 subsection 76 of the Companies Act 2013 is there. So all the related parties will be covered here also from the purpose of SEBI LODR. Second, they have picked up accounting standard. So they have said, as per the applicable accounting standard, if AS is applicable, then AS 18. If Ind AS is applicable, then Ind AS 24, right? So whatever related party is there as per applicable standard, these related parties are also covered under SEBI LODR, right? Third, they have given the related parties as per their own, right? They have said that any individual or entity who is a part of the promoter group of the related of that reporting entity. So अगर कोई भी entity या कोई भी person उस promoter group का part, and promoter is defined under the Companies Act, right? So promoter does not mean कि promoter के पास कोई share होना चाहिए. There could be a situation, there could be a person there could be an entity which is not having any share but being a promoter of the company, right? So any individual who is a part of the promoter group is also covered under the related party definition as per the SEBI regulation. पहले 20% था, but effective 1st April 22 ये भी जो अमेंडमेंट आया था, ये नोटिफिकेशन डेटेड 9 नवंबर 2021 में आया था. तो आज की डेट में सारे पर्सन और एंटिटी जो प्रोमोटर ग्रुप का पार्ट है वो रिलेटेड पार्टी के डेफिनेशन में आएंगे ओनली एज पर सेबी एलओडीआर व्हिच इज एप्लीकेबल टू लिस्टेड एंटिटीज, राइट? और कोई भी एंटिटी या कोई भी पर्सन जो 20% या उससे ज्यादा होल्ड करता है, चाहे वो प्रोमोटर ग्रुप का पार्ट नहीं भी है, वो भी रिलेटेड पार्टी के डेफिनेशन में आएगा एज पर सेबी एलओडीआर. लेकिन ये जो 20% की लिमिट है, दिस विल चेंज टू 10% इफेक्टिव फ्रॉम 1 अप्रैल 2023, राइट? तो इस डेफिनेशन को उन्होंने 20% को 10% पर लेकर आ गए इफेक्टिव 1 अप्रैल 2023. सो दिस इज द डेफिनेशन एज पर रेगुलेशन 2 सब रेगुलेशन ZB ऑफ द SEBI LODR 2015, right? Now coming to the shareholder approval, or let's say which all transactions are covered under the related parties regime as per SEBI LODR. So I would say कि ये जो 9 नवंबर 2021 का नोटिफिकेशन था, so this has changed the life of the companies in terms of related parties identification and related parties approvals, right? पहले क्या होता था, पहले आपको ऑडिट कमिटी में जाना है, फिर आपको शेयर होल्डर के पास जाना है इन सम सिनारियोज, राइट? सो पहले रिलेटेड पार्टी में कौन कौन सी ट्रांजेक्शंस कवर होंगी? सो पहले जो लिस्टेड एंटिटी होती थी, लिस्टेड एंटिटी की जो रिलेटेड पार्टी, दोज ट्रांजेक्शंस वर कवर्ड अंडर द related party transactions, so which all transactions are related party transactions. Now if there is a listed entity, right, and listed entities is doing a transaction with the related party of the subsidiary, for example if A limited is a listed entity और A limited की subsidiary है B limited, right? तो A और B के बीच की ट्रांजेक्शन तो पहले भी कवर्ड थी, बट अब बी लिमिटेड की एक एसोसिएट है बी लिमिटेड की, फॉर एग्जांपल, या बी लिमिटेड का रिलेटेड पार्टी है जो ए का रिलेटेड पार्टी नहीं है, लेट्स से, तो अगर ए लिमिटेड की कोई ट्रांजैक्शन उसकी सब्सिडरी की रिलेटेड पार्टी से हो रही है तो वो भी रिलेटेड पार्टी ट्रांजैक्शन के एम्बिट में आएगा एज पर सेबी एलओडीआर. सेकंड, अगर लिस्टेड कंपनी की किसी भी रिलेटेड पार्टी की, मैं एक लिस्टेड कंपनी हूं ए लिमिटेड, उसकी जो भी रिलेटेड पार्टीज है, अगर उनकी ट्रांजैक्शन उस लिस्टेड कंपनी की सब्सिडरी के साथ हो रही है, वो भी रिलेटेड पार्टी ट्रांजैक्शन के कवरेज में आ जाएंगे एज पर सेबी एलओडी. तीसरा, अगर लिस्टेड कंपनी की सब्सिडरी की, लिस्टेड कंपनी की सब्सिडरी की उसकी रिलेटेड पार्टी के साथ ट्रांजैक्शन हो रही है, फॉर एग्जांपल ए लिमिटेड इज अ लिस्टेड कंपनी, बी लिमिटेड सब्सिडरी है और बी लिमिटेड की अपनी रिलेटेड पार्टी के साथ ट्रांजैक्शन हो रही है, वो भी रिलेटेड पार्टी ट्रांजैक्शंस के एम्बिट में आ जाएगी विद इफेक्ट फ्रॉम 1 अप्रैल 2022, राइट? अगर मैं 1 अप्रैल 23 की बात करूं तो मुझे भी नहीं पता कि कैसे कंपनीज आइडेंटिफाई करेंगे कि ये रिलेटेड पार्टी है या नहीं है. फ्रॉम विथ इफेक्ट फ्रॉम 1 अप्रैल 2023 दिस कवरेज हैज बीन एक्सटेंडेड, and I would read the definition, or I would say what was the definition or what was the coverage effective from 1 April 23, and it says that the RPT would include any transaction by a listed entity and its subsidiary with any other party. With any other party. Okay. For example, if Airtel is doing a transaction with Reliance Jio, so Airtel and Reliance Jio are nowhere related. But if they are doing a transaction and one can substantiate that by doing a transaction between Airtel and Reliance Jio, RJio or Airtel is benefiting each other, right? So that will also covered under the ambit of related party transaction. जब LODR के तहत related party transaction में कवर होंगी, फिर बात आती है अप्रूवल की, राइट? तो इन सारी ट्रांजेक्शंस का आपको ऑडिट कमेटी में अप्रूवल तो लेना ही लेना है, लेकिन आपको शेयर होल्डर के पास भी जाना है अप्रूवल के लिए। वो कब जाना है? सो आपको शेयर होल्डर के पास अप्रूवल के लिए जाना है व्हेन देयर इज अ मटेरियल ट्रांजेक्शन विद द रिलेटेड पार्टीज। अब बात आती है मटेरियल ट्रांजेक्शन क्या होगी, हम शेयर होल्डर के पास कब जाएंगे? अगर कोई ट्रांजेक्शन एक रिलेटेड पार्टी के साथ मैं कर रहा हूं एंड इट इज बियॉन्ड 10% ऑफ द कंसोलिडेटेड टर्नओवर ऑफ द प्रीवियस ईयर, राइट? सो दैट ट्रांजेक्शन विल बी कंसिडर्ड एज अ मटेरियल ट्रांजेक्शन। लेकिन ये जो डेफिनेशन थी ये अप टू 31 मार्च 22 थी। जो 9 नवंबर 21 का नोटिफिकेशन आया, इसमें इस डेफिनेशन को, इस थ्रेशोल्ड को और भी लिमिट कर दिया। फॉर एग्जांपल, एक कंपनी है, लेट्स से भारतीय एयरटेल लिमिटेड। भारतीय एयरटेल की जो कंसोलिडेटेड टर्नओवर है वो है 1 लाख करोड़ की, राइट? सो व्हाट इज द 10% ऑफ दैट? द 10% इज लेट्स से 10,000 करोड़, and they are doing a transaction with Bharti Infratel Limited or Indus Tower Limited, who is the joint venture of Bharti Airtel, right? तो जो 31 मार्च 22 तक की डेफिनेशन थी, उस डेफिनेशन के तहत 10,000 करोड़ तक की ट्रांजैक्शन विल नॉट बी कंसिडर्ड एज अ मटेरियल ट्रांजैक्शन। लेकिन इफेक्टिव 1 अप्रैल 22 ये जो चेंजेस आए, इसमें बोला गया कि 10% ऑफ द कंसोलिडेटेड टर्नओवर और 1,000 crore whichever is lower. So now more transaction has been covered under the ambit of material transaction for the shareholder approval. और इसमें जो आपको shareholder approval लेना है वो भी आपको non interested shareholder का approval लेना है. For example, if the Airtel guys are sitting on the board of, let's say, Bharti Infratel or in this transaction, so they are not allowed to vote in this transaction, right? So non-interested shareholder का approval लेना है for material transaction, and the definition of material transaction is 10% of the consolidated turnover or 1,000 crore, whichever is lower, right? So that will be considered as a material related party transaction. Now, जो ये 23rd जब ये 9 नवंबर का अमेंडमेंट आया, इसमें बोला गया ऑडिट कमिटी पे कुछ रिस्पॉन्सिबिलिटीज और डाल दी गई। उसमें बोला गया कि यू नीड टू डिफाइन व्हाट इज मेंट बाय मटेरियल मॉडिफिकेशन। In case of material modification, shareholder need to approve that transaction, right? So first we were talking about the transaction which is material. Now we are talking about the existing transaction and where there is a material modification, right? There is a change in that transaction. तो वहां बोला गया ऑडिट कमेटी को, you need to define what is meant by material modification and disclose it as a part of your related party policy, because as per this SEBI LODR rules and as per Companies Act, you have to publish the related party policy on the website of the company, right? तो आप पहले डिफाइन करोगे और आप उसको पब्लिश करोगे कि मटेरियल मॉडिफिकेशन का मतलब क्या है। एंड अगर वो ट्रांजैक्शन मटेरियल मॉडिफिकेशन की जो थ्रेशोल्ड है उसके बियॉन्ड जाती है, देन यू हैव टू गो टू द शेयर होल्डर फॉर द अप्रूवल, राइट? सो दिस इज अगेन वन ऑफ द डिस्क्लोजर रिक्वायरमेंट और अप्रूवल रिक्वायरमेंट फ्रॉम द SEBI LODR पर्सपेक्टिव। तीसरा शेयर होल्डर की अप्रूवल की रिक्वायरमेंट कब आएगी? There are some transaction which is defined under section 188 of the Companies Act, right? जो ये बोलता है कि आपको कहीं जगह पे आपको, फॉर एग्जांपल सेल परचेज की अगर मैं बात करूं, या मैं लीजिंग ऑफ प्रॉपर्टी की बात करूं, या मैं अवेलिंग और रेंडरिंग सर्विसेज की बात करूं, या मैं किसी एजेंट की अपॉइंटमेंट भी की बात करूं फॉर द पर्पस ऑफ परचेज और सेल ऑफ गुड्स एंड सर्विसेज, राइट? अगर ये इसकी जो ट्रांजेक्शन की थ्रेशोल्ड 10% ऑफ द टर्नओवर से ज्यादा है, whenever I am saying turnover, it is consolidated turnover, right? तो अगर ये उससे ज्यादा है, राइट, तो आप कहां जाएंगे? आप शेयर होल्डर के पास जाएंगे, प्रोवाइडेड सेक्शन 188 में ट्रांजैक्शन स्पेसिफाइड है और उसकी लिमिट भी स्पेसिफाइड है। अगर वो ट्रांजैक्शन आर्म्स लेंथ और ऑर्डिनरी कोर्स में है, तब आपको शेयर होल्डर के पास जाने की जरूरत नहीं है। अगर वो ट्रांजैक्शन आर्म्स लेंथ या ऑर्डिनरी कोर्स में नहीं है और इसकी थ्रेशोल्ड भी ब्रीच होती है, देन यू हैव टू गो टू द शेयर होल्डर फॉर द अप्रूवल। So these are the three scenarios in my mind where you need to go to the shareholder for the approval of the related party transactions, right? So coming to the again disclosure part, as Kamalji has also explained the regulation 27 in his initial deliberation. So first of all, let's talk about the disclosure requirement. SEBI ने एक प्रेस्क्राइब फॉर्मेट दिया हुआ है और हाफ ईयरली बेसिस पे जितनी भी लिस्टेड एंटिटीज है उनको ये सारे के सारे रिलेटेड पार्टी ट्रांजेक्शन उस प्रेस्क्राइब फॉर्मेट में विद इन 15 days from the date of board meeting वो file करना है. Up to 31st March 22 it was 30 days. Effective 1st April 22 it become 15 days from the date of board meeting, and you would be surprised to know that कि ये अपना effective 1st April 2023 से it will be on the same date of the board meeting. जैसे within 30 minutes आप results file करते हो from the conclusion of the board meeting, although the time is not there, right? So within 30-minute duration is not there, but on the same date you need to file this related party transaction disclosure in the same format, right? So these are the definition of the related party as per regulation 23. These are the approval requirement and these are the disclosure requirement as per the SEBI LODR. If you have any question, I would be happy to answer, or Kamal ji can add on this further.
आपने सर कोई स्कोप छोड़ा नहीं है ऐड करने का. We have very comprehensively covered almost entire LODR on this disclosure.
Thank you, sir.
So we will proceed
Ji.
with our next question, Kamal ji. This will be for you. In terms of latest FAQ, which were issued on 25th April 2022, or regarding SEBI LODR Regulation 23, how is the exemption from RPT disclosure under Regulation 15.2 of SEBI regulation be interpreted? And if you can explain it with the example.
Okay, so first of all, let me add something to the question. This FAQ is not issued by SEBI. This FAQ is issued by Bombay Stock Exchange on 25th April 2022. And this FAQ primarily is a guidance note issued by BSE on disclosures vis-a-vis RPT. So this is the first of all, we need to be very clear. This is not issued by SEBI. It is issued by BSE. Now, one of the FAQ, which this question is being asked by Ashaji, is all about how the exemption from RPT disclosure under Regulation 15.2 of SEBI regulations should be interpreted. We need to understand what Regulation 15.2 says. Regulation number 15.2 deals with applicability of SEBI LODR. I repeat, Regulation number 15, sub-regulation number 2 deals with applicability of SEBI LODR. What does this regulation says in respect of Regulation number 23? Now, what is Regulation number 23? Regulation number 23 is about RPT. So if we read Regulation number 15, sub-regulation number 2 harmoniously with Regulation number 23, what it says, the compliance with respect to Regulation number 23 shall not be applicable for a listed entity. I repeat, the compliance requirements of Regulation number 23 shall not be applicable on a listed entity if following two conditions are cumulatively fulfilled. I repeat, following two conditions are cumulatively fulfilled. Now, what are these two conditions? I mean to say, if you will fulfill these two conditions cumulatively, collectively, then only the compliance requirements of Regulation 23 shall not be applicable. So what are these two conditions? Condition number 1, the equity share capital of such listed entity shall not exceed. Please mind my words. I am using the word shall not exceed. I am not using the word at least. The words are shall not exceed. So the equity share capital of such listed entity shall not exceed rupees 10 crores. So equity share capital का जो limit है वो क्या हो गया? It shall not exceed rupees 10 crores. It means it must be less than rupees 10 crores. I am not saying less than equal to. I am saying less than. Equity share capital shall not exceed rupees 10 crores. And the word is and. Number second condition, its net worth shall not exceed rupees 25 crores. So equity share capital का parameter जो है वो less than 10 crores है. Net worth parameter is less than 25 crores. And what you need to remember, these two thresholds, equity share capital not exceeding rupees 10 crores and net worth not exceeding rupees 25 crores shall be considered as on the last day of the previous financial year. Shall be considered as on the last day of the previous financial year. For example, let us assume ABC Limited is a listed entity. ABC Limited is a listed entity, and as on, let me assume as on 31st March 2021, as on 31st March 2021, its paid up capital, its paid up equity share capital, I must say, its paid up equity share capital is say rupees 8 crores. And its net worth, say is rupees 26 crores. I repeat, its paid up equity share capital is rupees 8 crores and its net worth is rupees 25 crores. So what is happening in my example? Paid up equity share capital is less than rupees 10 crores, but net worth is more than rupees 25 crores. In that very case, RPT disclosures are mandatory for year 21-22. Second example, the paid up equity capital as at 31st March 2021, let me assume is exactly rupees 10 crores and net worth is exactly rupees 25 crores. In that very case, for the financial year 21-22, RPT disclosures are not mandatory. The things are not yet over. The regulation further says, regulation number 15(2) further says, once the RPT regulations become applicable to a listed entity, that means once applicable, then what will happen? Once the RPT regulations, that means regulation number 23, once the RPT regulations become applicable to a listed entity, then these regulations shall continue to remain applicable till such time the equity share capital or the net worth of such entity reduces and remains below these specified parameters, that is threshold, for a continuous period of 3 years, 3 financial years. That means 3 years window is there. To substantiate through an example, let us assume RPT disclosures were mandatory in year 21-22. So I'm assuming RPT disclosures were mandatory for the financial year 21-22. Having said that, by virtue of regulation number 15, sub-regulation number 2, RPT regulations shall become applicable for financial year 2023, even if the specified thresholds are reduced and are reduced below those very thresholds, and it will remain applicable continuously for financial year 2023, 23-24, and 24-25. So 3 years window we need to assess. I believe, Ashaji, this example is aptly clear.
Yes, sir. Yes, absolutely clear, sir. So as we are also running out of time, so we will be little bit fast. My next question for Alokji, you, whether dividend paid by subsidiary to its holding company is a related party transaction. And another this related question is, can you also give an example of disclosure of related party transaction in case of 100% subsidiary where some common expenses are shared between the holding and subsidiary?
Yeah. So first of all, talking about the dividend, whether it is a related party transaction or not. Yes. From the accounting standard and Ind AS perspective, of course, it is a related party transaction. But from the SEBI LODR perspective, right? So again, this 9 November 2021 is a very important date, I would say, for a listed companies, right? So that regulation says that if there is a uniform offer to all the shareholders, right? When I'm saying that I'm offering a right issue, so it is uniform for all the shareholders, not only for the promoter, not only for the related party shareholders, but to everyone. For example, my company, let's say Industar Limited and Bharti Airtel and Vodafone Group is our promoters, right? They are holding close to 70% of the entire shareholding. 30% are the independent shareholders, are the widely dispersed shareholder, right? So if we are paying a dividend of 11 rupees, I cannot say that I am only paying to my promoter shareholder. We are paying to everyone, right? Even if Kamalji is holding 2 shares, he'll get 22 rupees, right? In the last quarter, he has already received 22 rupees. So SEBI LODR says that from the perspective of coverage of related party transaction, this dividend, right issue, bonus issue, buyback, these kind of things are not covered under the related party transactions. So from SEBI LODR perspective, from the approval perspective, it is not a related party transaction. But yes, from accounting standard and Ind AS perspective, it is a related party transaction which is required to be disclosed in the financial statements, right? So coming to the second question, Ashaji, you have asked to provide some examples where expenses or cost has been shared between holding and subsidiary. There are a lot of examples. For example, holding and subsidiary are jointly incurring an expense on a project, right? Where holding is paying, probably subsidiary is reimbursing that, or vice versa. Subsidiary is incurring and holding is reimbursing that. The second one could be, it is a very, it is a very prominent kind of thing. So holding conclaves, meetings, right? Conducting seminars, training expenses, right? Hiring a consultant who is giving an opinion to one company, and this, like in case of a group, one company will take the opinion, right, and it is applicable to every company in the group, right, and they are just sharing the expenses, sharing the cost for that. So these could be some common cost which is shared between holding and subsidiary companies. I hope I have answered properly, Asha.
Alokji, what we specifically need to take care of while disclosing these type of transactions?
So I think before disclosing this kind of transaction, I think the first thing is, the approval must be there, because if there is a transaction between the listed companies, of course there must be approval, there must be a contract, there must be an arrangement. It is not like a open-ended transaction. Second, of course, if it is a reimbursement, so you have to appropriately disclose these transactions in your related party disclosures. I think you cannot say that this is a cost which I have incurred and this is already reimbursed by the subsidiary companies or a related parties, so probably I will not disclose these things. I think you have to disclose this transaction in the related party disclosures as well. Kamalji, you can add if you want to add anything.
You have sufficiently covered. If I wish to add, I can add common hedging expenses. Then there could be common ESOP expenses, whereby cross ESOPs could be there.
Okay. Next question will be for you, Kamalji. If we compare this Ind AS with the Companies Act 2013, what are the transactions which are in the scope of within the scope of Ind AS 24, but not within the scope of Section 188 of the Companies Act?
So most of the transactions Alokji already covered. If I give some examples, dividend is one of them. So dividend transaction is not there in Section 188. Payment of interest on loan or receipt of interest on loan itself is not a transaction in 188. Then guarantee contracts are not in the scope of Section 188. Equity infusion is not in the scope of Section 188. All these transactions are there in Ind AS 24 scope. These transactions in scope of your AS 18 as well. So primarily, standards are broadly covering almost entire gamut of transactions, but Section 188 is not covering. Now, if I supplement my answer, we should not focus our agenda only on Section 188. Like Section 188 is not covering loan transactions, but if we see at a macro level, it is being covered by Section number 185, Section number 186, where it is talking about loans to directors, intercorporate loans and investments. So although they are not nomenclatured as party-related transactions, but more or less the approval scenario is same. Board approval or shareholders approval, as the case may be, required for different perspective. One more big thing which we need to highlight over here is when the standard is talking about RPT, but they say irrespective of whether any price is charged or not. But in case of your Section 188, some numerical thresholds are there which are quite indicative that some kind of monetary element will be there as a matter of consideration. Because if monetary element as a matter of consideration is not there, we cannot say the transaction is at ALP, arm's length pricing. So that arm's length pricing is also one of the triggering point which is there in Section 188, but is not there per se in Ind AS or AS. And surprisingly or fortunately, I don't know, the arm's length principle is also absent in SEBI LODR. So that is the triggering point which company law is throwing upon us, but that triggering point is put to rest when we come to standards and SEBI LODR.
Very rightly said, Kamalji. Like for
maybe
yes,
Kamalji, it is because 188 talks about that even if it is at not at the arm's length, then the further requirement is there, and there in SEBI LODR and standards they disclose whatever there is.
Yes,
Let
yes,
stakeholders
yes.
take care.
Right.
Yes.
Yes.
Okay.
Like Kamalji just gave this thought of arm's length price. So my next question will be to you, Alokji. Like RPT, it is said that RPT should be at the arm's length price, but as you both have already explained that it has not been defined in either in the AS or Ind AS or in the Companies Act as well, or neither in the SEBI LODR it is explained. So how this term should be interpreted and from where the guidance can be borrowed?
Yeah. So yes, this arm's length. So everywhere it is given that you have to disclose that the transaction is on arm's length. But what is the meaning of arm's length? That is not defined anywhere. But Section 188, subsection 1 touches that arm's length principle, or let's say arm's length transaction, is defined as a transaction that if it is conducted with a related party, so what happens if it would have been conducted with the unrelated parties, right? So that there would not be any conflict. So this is touched by just Section 188, subsection 1. But of course, methodology is not defined. For methodology, we have to refer transfer pricing guidelines, which is given by OECD TP regulations, right? So in listed companies, for example, if I talk about my practical experience, right, because we are a listed company and we have an independent board and audit committee, even after this amendment in SEBI LODR. So when you go to the omnibus approval, in omnibus approval, there is a column which says that whether this transaction is backed by whatever transaction you're proposing, is it backed by some external reports or some, other independent reports, right? So being a listed company, there's a lot of listed companies are relying on the arm's length pricing report by the external consultant, right? But how it comes? So they are applying the transfer pricing methodology, right? Like cup method for benchmarking the transaction, whether it is on arm's length basis or not. Like RPM method, retail sale price method, comparable price method, a TNMM method, transactional net margin method. So the crux of the story is they have to refer this OECD TP regulations to benchmark this transaction, whether it is on arm's length basis or not. So this is my take on this ALP.
Whether this reporting is for listed entity or non-listed or anyone, we should use OECD guidelines and TP pricing methodology to get that to arm's length price. That should be the case.
This ALP is not only from the SEBI LODR perspective. This is from the Companies Act perspective as well, from the accounting standard perspective as well, right? And this related party transaction has to be approved by the audit committee, which is applicable for unlisted entities as well. So it is applicable for everyone.
Yes. My next question will be to you, Kamalji. What are the common non-compliances observed in the reporting of this compliances required under AS 18 and Ind AS 24 and also Companies Act?
For this, I believe none other than Pramod Jainji would be the best resource person, but I will try my level best. The most common mistake, which I must say, is from two perspectives. One is the Companies Act, second is accounting standards or Ind AS. So I will begin with the Companies Act first of all. Most of the times I have found that focus entirely is on section number 188. Certain transactions like deposits received from directors and their relatives. Then other transaction is intercorporate loans and investments. Then other one is loan or guarantee given to directors or some other relatives associated with them. They are not considered even as party-related transactions. But we need to understand section 188 is a specific section. But other sections also need to be coupled for the purpose of entire macro level of coverage of these RPTs. Other mistake which I must say is, which even Alokji was discussing, ALP. What I have observed during my course of practice, people do pass board minutes and resolutions by considering and saying that, yes, the transactions are at ALP, but ALP report is missing. Thirdly, on 22nd January 2021, CSR rules were amended. And some companies are taking their CSR activities through implementing agencies route. These implementing agencies in general are sectioned companies who are subsidiaries of the companies themselves. So those CSR projects which are undertaken via this route, sometimes as a matter of maybe ignorance or maybe overlooking, are not considered as RPTs. Other mistake which I must say is, if you go to the standards, accounting standard 18 is not covering remuneration paid to independent director as RPT. But Ind AS 24 covers the same as RPT. So what is happening, those who are traveling or transitioning from AS to Ind AS are still under the old scenario. So this is one of the mistake, that what you need to remember, remuneration like sitting fees paid to independent director is a RPT for the purpose of Ind AS, although it is not for the purpose of AS 18. Second mistake is, when you disclose RPTs, we need to be focused that we have to prepare a tabular format and we need to write transactions with the parties having control, having significant influence. And then we have to describe the nature of parties also. Relatives hai, yeah, joint ventures hai, yeah, holding hai. I have seen some annual reports, but they're writing other parties related. Now this other parties related is a kind of balancing figure game. So you have to describe the nature of parties. So these are some of the common mistakes. Other mistake is in the audit reports. If you refer para number 30, para number 3, para number 13 of CARO, maybe 2016 or 2020. As of now, it is 2020. Para number is same. Para 3, para 13 of CARO requires the auditors to report on two elements. One is whether the company has complied with or not Section 177 and 188. And second is whether the company has disclosed RPTs in notes to accounts properly or not. I will not comment upon the first limb, Section 177 and 188, which we have discussed at length. But what I observed in some of the annual reports, in notes to accounts, there was no disclosure of party-related transaction. And the auditor is commenting that RPTs are properly disclosed in notes to accounts. So this kind of mismatch is there, which is apparent on the records. So these are some of the common mistakes which apparently do take place.
Very, very rightly pointed out, Kamal sir, about these things, and few other things which are very, very obvious should be there. Like certain cases, previous year details are not given.
Yes.
In certain cases, closing balances are not given. These are the
Yes.
very, very basic things of the related parties. So certain cases, names are given, relations are not given. These are the basic things which are required by the standards, and they should be done. Even for the case of corporates, even non-corporates, even limited liability partnerships. Question was raised by one of the queries out there to LLP, what is applicable? Yes, LLP would be the same level, which is for the non-corporate, which Alok sir talked about, level 1, 2, 3, 4. So level 1 and 2 both have to do it. So above 50 crores, the requirement to disclose the related parties there for the LLPs also. Right.
Yes, and another connected question, Kamal sir. What are the penal consequences for this wrong disclosure, non-disclosure?
So I should not discuss about DC, disciplinary committee over here. Other than that, I can highlight. So as far as penal consequences are concerned, I will start from SEBI LODR. In SEBI LODR, you may take a note, regulation number 98. So regulation number 98, SEBI LODR gives the powers to levy some penalties, even freezing of accounts of the promoters if any of the regulations are contravened. So regulation number 98 deals with these kind of penal provisions. Now come to Companies Act. So in Companies Act, I will not give the amount per se, because amount may be quite terrifying amounts, but yes, one or two amounts I will give you. Section number 129. The section number 129 of Companies Act deals with financial statements. And it says that financial statements must reflect true and fair view in compliance with the accounting standards. Meaning thereby, if any of the accounting standard requirement is not aptly or properly disclosed in notes to accounts, then penalties under section 129 could be levied. And these penalties involve imprisonment. If my memory serves me right, penalty for imprisonment is up to 1 year. And if you go to the fine, now we need to remember fine is different from penalty, because penalty can be levied by ROC and fine could be levied by adjudicating officer. For that purpose, you need adjudication. So under section 129, the fine could be of minimum rupees 50,000 and it can go up to rupees 5 lakhs. That is what section 129 says. And there is a very good judgment, Deva Jaya case. You can refer that Deva Jaya case of Madras High Court. This could give you some kind of impression over the penalties and fines. So to refer this case, you can refer Google or maybe some kind of subscription you are offering. In that very case, you will find one good, I must say, analogy. Section 448, which is one of the section which is least talked about section. So if notes to accounts are incomplete, it may give an impression that you have suppressed the information or if you have not given the information. So if notes to accounts are incomplete, it may lead to a kind of dispute that information is suppressed, and section 448 penalties could be levied. And then we have section number 450, general penalty. When there is no penalty, then general penalty. So general penalty is given by section number 450, which says that if nowhere any kind of fine is defined or penalty is defined, then there would be a fine of rupees 10,000 plus rupees 1,000 per day. So these kind of scenarios are there. So there are 4 points. One is regulation number 98 of SEBI LODR. Second is section 129 of Companies Act. Third one is section number 448 of Companies Act. And last one, that is number 4, is section number 450 of Companies Act. As far as auditors are concerned, so these penalties I'm talking about from the point of view of company and officers in default. If I come to the auditor's side, for auditor side, one is our beloved Chartered Accountants Act and other proceedings thereunder. And second thing is section number 147 of Companies Act. So if something is bad that way, section number 147 of Companies Act can be invoked and appropriate, or I should not say appropriate, but yes, the word is quite cumbersome. Penalties could be levied.
Alokji, would you like to add anything to this?
Add something more to the penalty.
So I think Kamalji has completely covered. I would not say sufficiently covered. He has completely covered. So I would like to add on the non-compliances part, which Kamalji and Pramodji has
Yes,
covered
sir.
that. So I have seen some non-compliances with respect to KMP's disclosure, right? Because when I talk about KMP, of course, I'm talking from the Ind AS perspective, right? So it says that you have to disclose employee benefits, right? So this employee benefit is given under Ind AS 19, not under Ind AS 24. So the classification of employee benefit, short-term employee benefit, long-term employee benefit, post-employment benefit, termination benefit, share-based payment. So if there is a remuneration which is given to KMP, this remuneration has to be disclosed in this 5 manner, right? In these 5 classifications, that is one. And I was just looking at this FRRB observation when I was taking the session on non-compliances just 2 months back. So there was a holding and subsidiary company, right? And holding company has given a loan to the subsidiary company, and holding company has made an appropriate disclosure, but subsidiary company has not made the disclosure, and it has just referred to please see the disclosure in the holding company. So every financial statement is an independent financial statement, so you have to do all the disclosure as per Ind AS 24. The third one which I have found that, bad debt, if there is a bad debt relating to a related party, so these bad debts are also required to be disclosed as per Ind AS 24 or as per accounting standard 18. So but companies are not disclosing these kind of things, so I think these kind of things should be taken care while disclosing related party transaction.
Okay,
Yeah.
thank you, Alokji. Before going for the questions from our participants, just if you want to add anything else for today's session, which you want to share with our participants from your side, Alokji.
So I would say that I have started this thing that this session is highly focused and mostly ignored, right? So even I have seen the culture in the companies, and I'm of course from the industry side. So people take this related party transactions or related party disclosure very lightly, and I would say that it should be taken very heavily, not lightly, right? So because this is a compliance matter, and we need to be more cautious about related party transaction, that what is a related party transaction. So we need to see all the pillars of the related party transaction. For example, I could say one of the real life experience in my company, right? So as per Ind AS 24, if a company is having a common director, and that common director is, of course, the director is sitting on the board of my company, and that director is also sitting in the board of the private limited company, right? And we are having a transaction with that private limited company. So to my mind, you are not looking only from the Ind AS perspective, you have to look from the Companies Act perspective as well, right? So according to Companies Act, this is a related party transaction. Vice versa, according to Ind AS 24, if, for example, if there is a JV company, right, and that JV company is a JV of a common venturer, right? So that is a related party transaction under Ind AS 24, but not a RPT under Companies Act. So we have to see all the angles, because on Companies Act is applicable, Ind AS or accounting standard is applicable, and if it is listed, of course, SEBI LODR is applicable. So we have to look this compliance from all the angles, not only from a single eye. So that is my take or my view on the related party compliances.
Very rightly said, Alokji. Kamalji, would you like to share anything else from our with our participants?
There's a lot to share. Only thing I must share is that we should keep on referring ICAI publications, specifically the publications of FRRB, where very categorically they have highlighted what are the common mistakes, so we can learn from other people's mistakes, and that will be learning experience. Otherwise, this topic is so huge that you can run through this topic even for a month, maybe for a year also. But only thing is, to conclude from my side, additional point is, please keep on referring ICAI publications, and these are available free of cost on ICAI.org. If you will go there, you will have to search for the non-standing committee FRRB, and the publication tab is there, you can download.
Yes, very rightly said, Kamalji. We need to go with, check with the publication of ICAI. Just a will is needed to search that guidance note, and we will get it download from the Google, and that too free of cost. And I think all the questions in the chat box has already been covered in our session by our learned panelists. So thank you very much to both the panelists for sharing their knowledge.
No, in fact, Asha, there have been various questions in the by the participants, but due to paucity of time, some of them, of course, during the deliberations have been answered, but many of them could not be taken due to paucity of time, because the topic was so livid, and the way both the panelists discussed it, it was really awesome, and really I enjoyed
Absolutely,
it
sir.
thoroughly. I enjoyed it
Absolutely,
thoroughly, sir.
sir.
Even I was hooked at some other place, but I just kept that aside and kept on listening. And members also have really enjoyed it. And just for the knowledge, because everyone, a few of them asked, of course, that how can they view it again? Of course, all these webcasts, including this one, would be available on the ICI TV, ICAI TV. If you go there, you go to the ASP, you'll get all these webinars which are live there. So you can just download, or you can just view out there. And again, I really thank from the core of my heart both the panelists, Kamalji, Alokji, splendid. The knowledge which you displayed, I suppose a lot of the members would be in awe of both of you. And of course, Asha did a splendid job, not
Sir.
only compiling the questions, but taking it through, taking it more interactive, and making the session so lively. Thanks to you, Asha. And also thanks
Thank
to
you so
Shalini
much.
Jindal, who has done a splendid job on regularly organizing webinars. And thanks to all the members for working in. Thank you very much. Thank you.
Thank you,
No.
sir. Thank you very much.
Thank you, sir.
Thank you, sir.